perennial question, buying a property for investment. We've got some cash, how do we spend it? What do we want?
It's a surprisingly regular question, and in fact an increasingly regular question that we're asked, and I would say almost on a daily basis. And we'll have individuals come into us, and with all due respect to them, they quite often don't have a clue what they're going to do with their money. They just know they want to invest in property, they want to buy some flats, and they come to us seeking advice. So the first question I would always ask them is, what is your main ambition here? Do you need a property that's going to go up in value and offer you high prospects for capital growth over the long term, or do you need a steady income and a monthly return from the rent? And it's very difficult to find a property that will offer you both. That is the holy grail in property investment. So establishing that will very quickly determine what kind of property they're looking to purchase. Obviously, identifying how much they have to spend is very important, and then deciding, do they buy one larger property or two smaller properties? We'll discuss whether or not they've had a conversation about lending. But what I would normally do to any investor is before they start, I'll put the brakes on and say, have you spoken to somebody about tax implications, a bit of guidance on tax? Have you spoken to somebody about lending? Do that first so you know what your strategy is, what you're trying to achieve, what you've got to spend, then come back to me, and then we'll start actually tailoring it and decide which properties are going to perform best for you. So I would frequently refer them on to David at Johnston Smillie.
That's a sensible approach, isn't it?
Absolutely. It's the ideal scenario, because we would far rather speak to a client and help to advise them how to move into the market, whether to buy the property in their own names or in joint names with their spouse, or to buy it through a company. It's far, far better to take advice in advance rather than to come to an accountant after the event and say, I've done this, what do you think? And you hold your hands up in horror and say, why did you not come to speak to me 6 months ago? We would have done it differently. So taking the advice in advance is the way forward, in my opinion. And then when you speak to the client, I think it's very important to formulate a plan with the client. Get the client to sit down, write a plan, decide what they want to do, how they want to do it, how they're going to manage that property throughout its lifetime, and also, most importantly of all, plan an exit route.
Do you find that's what people are doing more often now? If they're approaching?
Well, I think the main thing people need to think about before they look to buy a property for investment purposes is how much of a deposit they've got and how do they finance the rest of it. If they need to raise finance to help them buy the property, we've seen some quite big changes in the market this year. So historically, over the last number of years, people have been able to get a buy-to-let mortgage if they had a basic level of income themselves and the rental on the property more or less had a bit of margin above covering the mortgage payments. There's been a lot more built into that assessment process now, and in January this year new guidelines came out which makes it not more difficult, but it means that the rental coverage has to be more of a buffer between that and the mortgage payments. And the upshot of that really is that people maybe can't borrow quite as much. The rental yield is really important in terms of how much they can borrow, and a bigger deposit may be required, and that can determine whether people buy one property or two properties. So these sorts of things, because we've seen so much change over the last 9 months or so, are really, really critical that people understand that and know how much they can borrow in advance before they embark on the journey of their strategy and deciding
There has been so many changes in tax legislation, primarily with how tax relief on interest for a mortgage to buy a buy-to-let property is relieved. That people need to be very, very mindful of their tax situation. So you need to look at that very, very carefully, because by 2021, when the new rules come completely into force, tax relief will not be as generous on mortgage interest. Going back to my point earlier about the exit route and what Murdo mentioned there, and Rob as well, about buying two properties rather than one. The cost of buying a property now has changed. It's become more expensive in Scotland because of the rates of what used to be stamp duty now, land and building transaction tax, and the additional dwelling supplement. And you'll pay double the amount of tax to buy a £500,000 property compared to two properties at 250,000.
And then on that, it's very important to make sure that what you're buying there's going to be a tenant that's going to look to rent it. I mean, there's no point buying something because it looks nice and it's in a nice part of town if nobody's going to occupy it. So, and actually on that vein, you know, two more modestly priced properties will tap into much bigger markets. You know, the more affordable the rental accommodation is, the more demand there will be for
And
it.
it also helps in the exit route when you're trying to mitigate any eventually capital gains tax. Easier to sell two small properties over a period of time rather than having a lot of gain in one particular property.
But it's a preferable option that they're coming to you and saying, I would like to buy a property, what will we get in rent, rather than I've just bought a flat. What will I get?
To be honest, it's increasingly that people come in advance. I think people do. Most investors are recognising that if they don't know what they're doing, they really need to take advice. But it's quite common that somebody will come to me with an idea in their head, and you'll very soon realise that you're going off in completely the wrong direction with this. And I think understanding who is it you want to rent to, who is your target tenant, and most importantly, are there many of those about? So, you know, choosing a good location in a city, choosing the right city to start with, and making sure there's a good growing economy there, and there's a growing population, and there's plenty of employment. That's crucial. Then choose a property that will appeal to that type of demographic. And I think if you do that right, you take your advice in advance, then you're positioning yourself very, very well for a
Some
profitable venture.
landlords are what I would call accidental landlords, and maybe a couple come together and they don't sell a property and decide to rent it out. So the decision has already been made. They're going to rent out a particular property. But if someone's going to enter the market for the first time, they want to speak to somebody like Rob who could advise them where to buy, what size of property to buy, what type of market to tap into.
So the key to this is, if you want to get the best from your investments, is take advice and take it at an early stage.
Absolutely.
Okay.